Hey everyone, Chris Johnson with Money Morning, here to talk about Nvidia. It's been a hot minute, but the stock is down 10%, and that is after last week's better than expected earnings report. I'm going to talk about why the stock is moving lower, what's different this time around, and most importantly, this chart, real quickly, that's going to identify the support and, more importantly, the long-term buying opportunity for Nvidia. Stick with me for 5 or 10 minutes. I'm going to help you turn the market's fear into a buying opportunity on this hot stock. All right, like I said, it has been a hot minute since we've talked about Nvidia, but a lot has happened, and the chart that I gave you about a month ago is still in play. We're going to go through that in just a couple of minutes, and it's going to identify the exact points where you're going to see support come in for Nvidia. I don't want you to get faked out. I think we go a lot lower on this move. That's why I think you need to let the market's fear turn into a buying opportunity on the stock. I'll give you the price and an easy way to make sure that you don't let your emotions jump into it. Let's talk about what happened last week. I don't want to go through the numbers because you've already heard them. Everybody knows that the company came out with better than expected earnings and the revenue was much better than expected. I'm going to show you a chart that gives you a little bit of a different light on that in just a second, but this is what's really driving the price of Nvidia down right now. Things have changed. In this article that I published last week, I talked about the fact that the earnings were not the problem with Nvidia. Instead, the earnings problem with investors. It's actually their expectations of the stock. If you think about it, for the last couple of months, all we've heard about, even when some of the companies like Microsoft, Amazon, everybody kind of gave us a little bit of a weak outlook and reason to worry, the market still looked at August 28th and said, hey, Nvidia is going to come out and grab the market by the bootstraps and take us higher. And that's just not the case. We've seen now that better than expected earnings did not drive the stock higher. And that's because the stock was priced to perfection. Look at this chart. This is the emotional roller coaster that we go on with either the stock market or a stock like Nvidia whenever we see everybody crowd into things. Warren Buffett had his way of putting it. I like to show you this simple chart. Whenever we see the market get euphoric, they're absolutely crazed over a stock. It can't go wrong. That's when you need to be worried. Euphoria or even complacency, you'll hear, is that emotion that we need to watch out for, because in those situations, it's easier for investors to kind of turn and start running from a stock. Short term, that's what we're going to see from Nvidia here. So everybody was bullish on the stock. And even though it says bearish, that's how you should be. They were euphoric. A couple days before earnings, we actually saw analysts coming out saying, hey, this is going to be great, raising their price targets on Nvidia. So that euphoria was out there. What happened? Well, Nvidia came out with better than expected earnings per share. The revenue, the outlook was good as well. Maybe not as good as everybody wanted, but here is the actual problem that happened with the earnings. And what you're looking at is the actual difference between the expectations of analysts and the market and the actual numbers of the earnings per share and revenue from Nvidia. So call it the surprise margin here, the surprise history. And you can see the blue line here is the earning per share surprise. So as it goes up, that means Nvidia is beating earnings per share by a higher margin. And notice that you see these declines. It's either when Nvidia is falling off in terms of their earnings per share performance, or the other thing is that investors are raising their expectations. So they create a harder scenario or environment for Nvidia to actually beat. That's what we've seen here over the last year and a half or so. We have seen investors' expectations continue to go higher, but the problem is that Nvidia is not able to keep that margin, keep beating by the same percentage there. So as we make our way down to the point where Nvidia is now meeting expectations, even though they're high, it's just not enough. Remember, the market's looking for the next 6 months, the next 12 months in terms of where those expectations are going to lead. The fact that Nvidia is catching up means that there's let's call it a diminishing return on that margin. Same thing with the revenue. You can see here is where your AI revenue surprise came, that orange line. In 2023, we started to hear about Nvidia and their AI revenue, and they absolutely started blowing the doors off of earnings and revenue expectations. Revenue on a large basis there, now you're seeing the company catch up. That margin, if you will, between expected revenue and the actual revenue is getting smaller. That just means that investors are now, again, they've raised the bar too high. So what happens when that situation happens? Well, you get what we got last week. Earnings come out, the company doesn't surprise, and now you get headlines like this. Nvidia leads the NASDAQ down in a rough start to September. And that's your other factor that's going. That's why things are a little different here. We're heading into September. It is the worst month of the year, period. Everybody thinks you sell and may go away. No, you get out of the market in July right after earnings and you let the summer months sweat it out while you sit on the sidelines. September's the most volatile, and it is the worst performing for the S&P 500 when you look at the last 20 years. It's not May. January is not good. September is the worst. And October, which everybody thinks about as the worst, it's actually volatile, but it's your comeback kid month. So we start to get headlines like this. And when you go back to that chart that I showed you right there, the 4 stages of the rally or decline, now we get this situation where there's a lot of disbelief about Nvidia and the market to some degree, and we start to move into an acceptance phase where investors start to feel like, okay, things are selling off now. I'm going to jump in and sell off just like people were buying on the way up, and that drives the prices lower. So we get that headline. Here's your actual returns for the S&P 500, and this is over the last 20 years. Notice that -1%, and it doesn't seem like a lot. -1% when the market usually averages about 1% a month historically. It's a complete reversal. That's your worst month of the year. Now, I know what a lot of people are going to say. Hey, CJ, doesn't matter. We're talking about Nvidia here. Nvidia is going to perform. Well, guess what? There's your performance for Nvidia. And this is since 1999. 1999, you still have that sore thumb that sticks out, -2.3%. The stock averages during the month of September. That's winners and losing years since 1999. And I know what some people are going to say. Hey, CJ, it's not the same company that it was back in 1999 or even 2010. Well, here's the last 5 years. -6.8% in the month of September. It averages. That's the last 5 years. Guess what? There's still some people out there that are going to say, hey, CJ, that's not the AI Nvidia that we know right now today. -13%, and that's since 2021. So that's got your 2022, 2021, 2023, and obviously we're working on 2024. 3, 5, 25 year. I don't care what it is. Nvidia underperforms in September, -13% during its AI era. So we can cut up the timelines and look at it however you like. This stock is different right now, but it still acts the same way in September. So that chart that you want to see, and this is what we put out just a week ago that showed you the areas of the market where you're going to see support and accelerating selling on Nvidia. Here it is. Think of this as a roadmap, and this is based on technicals, and it's also based on the psychological levels that are driving Nvidia right now. Remember, investors' psychology is very important right now, or the sentiment that we're going to see. That sentiment swing, as it turns a little pessimistic here, is going to drive stock prices and Nvidia down. I'm going to say it one more time. Investor sentiment and psychology and the technicals are the most important thing that are driving Nvidia right now. It has nothing to do with the earnings report, with Blackwell, with any of this right now. Psychology and price. Let's get back to that chart very quickly. So I've got a few areas that are leveled here. Right here at $140. Notice that's where we saw the stock top out in June and then try to make its way back up there as we headed into July. That's where it was priced for perfection. This is a chart from 2 weeks ago, I believe, that I drew up. Price for perfection. Next price down is what I refer to as a pivot price, and we've broken through that. That's $120. That was your first level you were going to see as support, and this is something I identified also about a month and a half ago. I got called out pretty good to the math there, and the price is going that exact direction. This is a roadmap. It's a price chart, but it's a roadmap. Your pivot price was 120. The reason for that is that's that support resistance we saw in July. Notice the huge support that we saw June, July, and then we saw a breakout here in June that took us into July. 120 has been a key level for the institutions, not so much the retail traders out there. We've broken through that, and that's also the 50-day moving average. I'm going to show you the updated chart in just a second because that 50-day is one of the things that has changed. The next level that you've got, though, and we're right around 110, we broke through that today, but your short-term support, and that's going to be at $100. $100 on the button. You can also see that we got that support in the beginning of August. Why is that $100 so supportive? There's a couple of reasons. Number one, there's a lot of options activity, a lot of put options open at that 100 strike, and you tend to see those act as support. You've also got the most important thing, which is the psychological. Remember, I said psychological and prices. $100 is a round number anytime. I don't care if it's $10, $100, $1,000. Anytime you run into a level like that, it's going to act as support or resistance. We saw Nvidia slash through it after their earnings report back in May, and in that particular situation, it was gone. The market jumped right through that psychological level. We're now seeing the reverse. If we slice through it, people are going to use those double zeros of the $100 to be a trigger to get out of the stock. Back to that chart. So your short-term support here, and I expect to see it possibly before that jobs report on Friday, is going to be at that $100 level. Next level of support, and this is where you want to start looking to be a long-term buyer. We could go lower than this, but believe me, people got really angry when I said we might hit it about a month and a half ago. It's right there at $80. $80 is your next target down. That's another 20%, obviously, from $100. A lot of people will say, well, Nvidia can't go down 20%. Remember, this is a stock that just moved 10% in one day. That's less than a week's move away if we get some real volatility. And remember, that S&P 500 seasonality is right now blowing as a headwind for Nvidia. So $80 is, as far as it seems away at 20%, a little more than that, obviously, now, is still very much within reach here. That's the price where you want to start looking, and it's for a couple of reasons. Let's look at the current chart for Nvidia. There you have it. I'm going to point one other thing out, and when we go to these charts, I always like to tell you what the numbers are, what the lines are. That green is the 50-day moving average. Whenever you see that, that is the indicator or the trend line that tells you whether a stock's trend is its friend. Notice how bullish this has been. It's been a great time to hold Nvidia. When it turns over like that, that's when you need to start being cautious. The momentum has moved away from the stock and it's switched into the seller's control. Now, there's the 110 level that I mentioned. That's a little bit of support here, but $100 is that next level we're going to watch very, very closely, very closely. And I think you could see that as early as Wednesday this week, tomorrow, today, if you're watching it today. The next level, look at that 200-day moving average. The 200-day moving average is the other trend line that Wall Street watches. They watch the 50 and the 200-day moving average. That 200-day moving average, if we pierce it and the 90, you're going to start looking at going back to those April lows at $80. And that's where I'm setting my price targets right now. That's where I'm saying as a long-term bull, and I am on Nvidia, I want to be a buyer of the stock at that point, knowing that it could go down to $75. Remember when Amazon hit 100 and you still got an opportunity to buy it down in the 80s? You could look at another situation like that where you can reach down and pick up a stock. Remember, long term here, you're not looking to invest or trade in the noise. Get the emotions out of the trade. You set some limit orders to buy at that $80, maybe at $85 or so, and take a little bit of a taste knowing that the long term, you're going to run higher. That's as easy as it gets right now. Now, keep in mind, over the next couple of days, you are going to see a lot of headlines coming across, just like the one we saw with the worried trader, and that's going to drive more of those emotions. When you go back to the chart that I showed you, where the emotions guide Nvidia lower and lower, you want to wait until we feel that point where, oh my gosh, this is the end for Nvidia Despair is what we call it. Fear. Remember, it's always the best time to buy a stock whenever fear is driving the market or stock, and September is notorious for doing that. So, wrap it up here for you. And I put a little slide together just so you could have maybe not a rule, but at least a guide here. Watch that $100 mark here over the next few days. That is the key psychological selling point for the stock. You're going to watch that over the next 5 to 10 trading days. I do think we could hit that within 2 trading days. Remember, there's a huge report coming up here at the end of the week with the jobs report, and that's going to give investors a little confirmation in terms of what the economy is doing. Also, we've got that September 18th Fed announcement. Watch the sentiment around that. Keep in mind of how optimistic investors are that the Fed's going to come in and maybe not do 25, but 50 basis points. I'm going to tell you the Fed's going to try to play a short hand here and maybe let them do 25 basis points, but the market wants more, just like they wanted more from Nvidia. So watch that $100 level. That's psychologically important. A break below 100 opens up the pathway to an $80 target. That's been my short-term downside target on Nvidia for about 2 months here, and that's below the next trend line support at 200, but I think that round number and those bottoms that we saw early in the spring kick in. And like I said, take the emotion out of this situation right now. Look up how to trade using limit orders to buy stocks and sell stocks. That's usually how you get away from letting this volatility drive you crazy. And remember, you want to stay away from emotionally driven, emotionally charged markets. That's it. I'm going to remind you, go ahead and hit the link down below, or we'll get that QR code up if you want to use that. Go ahead and sign up for that 5 stock report every week. Like I said, it's a large cap tech, a growth stock, a dividend yielder, a stock below $10, and one stock to consider as a short. Airbnb's been on that list. There have been a few really good shorts on that list, and it's something you can get for free. I'm going to sign off for now. Chris Johnson from Monday Morning, wishing you the best trading success. Have a great day.